Good evening, good afternoon, wherever you are. Welcome to the investor and analyst briefing of Systems Limited. The format of the call will be a management presentation followed by a Q&A session. And for that, a few housekeeping rules are all participants will be on mute even during the Q&A session. And if you wish to ask a question, please post your question in Q&A box, not the chat box. And Suhail from Topline will moderate this session. He will read your question. He will put your question to Asif Peer, and Asif Peer will respond. Meanwhile, Ruhi and I will be responding to questions in Q&A chat box as well. Over to Muhammad Suhail.
Thank you, everybody. Thank you for joining this Zoom call on System Limited, which is Pakistan's largest listed technology firm and now largest in terms of free float market capitalization. So once again, thank you for joining. And as Tahir mentioned, kindly follow the house rules and please wait for 15-20 minutes before Asif Peer, who is the CEO of Systems, will give his presentation. And after that, we'll open the floor for question and answer. And again, requesting to be very precise and straightforward on answering questions. And if any questions have been answered, so please don't repeat it. And I want to thank Ruhi and Tahir also, who is from Systems Management, who will be supporting us in this session. So it's over to you, Asif.
Thank you, Suhail. Thank you, Tahir. And Assalamu alaikum. Good afternoon, good morning, good evening, all the investors and shareholders. So as Suhail said, we will just start quickly with the presentation, and then I would love to answer as many questions as I can. So Ruhi, please next. Okay, so systems at a glance, we will just quickly go through. So basically, if you guys can see that technology is transforming and shaping tomorrow. Digital transformation is everybody talks about it. It's a $1 trillion market by 2025. And especially what we are seeing in MEA region, especially in Saudi and UAE, this market is like spending money on digital transformation, AI, generative AI, all of the new technologies that really are progressing, and that's addressable market is $100 billion as per IDC. So it's a huge market, huge potential in the region, and as well as global. The market is pretty hot. Even the recession or whatever you say, wherever it is, the market are not stopping for data, digital, and cloud. Next. So the next is basically from, yeah. So systems at a glance, basically, I want to share that is basically, you can see from 2020, we just, we excluded from employees' perspective, like just the IT resources, not the business process outsourcing or the support staff. So you can see we have tripled in 2 years from a IT perspective, which is our consulting and digital services staff. Pakistan is our largest workforce, about 84%, but UAE is the second where we are growing. And from accolades perspective, we are proud to share and very thankful that we have been awarded by Microsoft. Inner Circle means like we are top 100 partner, one of the top 100 partners globally, recognized by Microsoft. We are Forbes Asia 3 years in a row as a best under $1 billion company for the top 200 companies they give us, and 3 years in a row is the only Pakistani company that has been awarded Asia Money. And we have been recently awarded by the Temenos, which is the core banking platform for the MEA region. So I think 21 and 22 both have been transformational years for systems. We have done our first ever acquisitions. We have expanded in all these geographies, KSA, Egypt, Australia, South Africa, and Singapore at a similar time. Of course, these are all expansions, all the investments going in, and the results will follow as we have shown in the past as well when we invested in Middle East, and the results start showing up. But we see an attractive market, and why we started together, because opportunity is immense, and it's today, and addressable market is increasing. So that's what our thought process was, and I'm glad to report all of these entities are operational. We have the boots on the ground in all these geographies, and we have the clients in all these geographies as well. So that is the first milestone, that you need to have first couple of large customers, and once you have first couple of large customers, then scaling up is definitely, at least you have a path to do it. Zero customers is always difficult. So I think I'm grateful that this year was transformational. We were able to do it. So we also started, I think whoever is following us, SAP was new thing for us a year ago. We were able to again invest in it. We still are in investment mode, but we invested, and we have now one of the largest in a year time, the largest workforce in SAP in Pakistan as well, about 200 plus people. We have done about 20 plus projects in SAP as well. So I think that's what I wanted to share. Whoever doesn't know about systems. Next. So we are serving 16 countries. I think that was a dream. And of course, we are expanding crazily. And I think now, since we have started all these countries together, we are strengthening all of these geographies, because investment has poured in, and we'll be double downing on wherever the more business is, and keep pushing the growth, because as I said, the opportunity is immense in MEA region, and it is not affected by all of these recession and downsizing or whatever you are hearing in other part of the world. This part is pretty strong. Even APAC is pretty strong. So we're pretty confident. And you can see the spread. Middle East and others is 47%. North America and Europe from a revenue perspective is 29%, and Pakistan is 22%, and Asia Pac is 2%. Even in, okay, next, Rui, I'll explain the next slide. So I think, again, our value proposition, very simple. We are very vertically aligned and vertically focused on banking, telco, growth verticals, public sector, and digital. As I said, digital is the core, whether it's digital services, digital transformation, data, cloud. And in data, you can talk about generative AI, augmented reality, and chatbots, and all of these things. But this is, we are really focused on technology. We're really focusing our strength. We're really focusing our strength in consulting, the management consulting, because we need to take our company to the next level, from SI to system integrator to global system integrator. We are already now, we are going into, we're investing and going into management consulting, so we can cover the end-to-end, whether we go, once we go into the account, we do consulting, we do implementation, we do support, managed services, and end-to-end, right? That's a goal, and that's what we are working towards it. We have been very much aligned with it. Next. So our value prop strategy and market positioning, I think we are well positioned in 700 plus. As I said, addressable market is huge. We have diversified client portfolio, and our revenue growth, as you can see, 56% CAGR, which is giving us great momentum and great thirst to move forward and invest further. We are one of those companies who are investing our profits into the growth, because we are in a growth mindset and growth oriented company. So all of majority of our profit goes to growth and reinvest in the growth, and because we would love to achieve hyper growth. Strong cash flows, because again, we make money. So it's our balance sheet from the cash flow perspective is great. Next. Digital, as I'm repeatedly saying that digital is the name, right? It's everybody wants to work in digital and cognitive environment, right? So whether you are transforming, business transforming, you are digitally transforming, you are technology transforming, you are optimizing your operations, you have to be on top of it. If you don't, then as a customer, and that's what we are seeing, whether it's bank, telcos, and public sector in the Middle East region and the large enterprises. And we have changed our positioning. We're not working with a lot of small, medium customers. We are now working with most of enterprise customers. Why? Because we need a recurring revenue stream year over year, which is growing. Because if the customer is enterprising, then of course they invest in technology. And once they invest in technology as a partner, we get a line share if we are focused in delivering the value to our customer. Again, the managed services is also repeat business. As you can see, the low-end business, the business process outsourcing, which used to be at one time 40% of our revenue, it is now just 4%. So we're just keeping just customers, whoever we are not, but our focus is digital and our focus is on technology. So BPO is percentage from 40 to 4% in few years. Next. And now, again, when I talk about consulting, you can't, from a client perspective and having a vertical presence, you have to have, company have to have the IPs and the solutions. We have built the country model bank. I will explain in the later how it is going to help us when we are sharing up the numbers. What country model bank does is we have exclusive we have the preferential right or first right of refusal in the 7 countries where we have developed the country model bank for the core banking platform, which is Temenos. What does it mean? All the regulations, all the local laws and regulations, rules, business rules, all the integrations are pre-built. So we have, I think whoever has seen our director report, we have bought this 5 years right of 7 countries from Temenos. What does it mean? That any upgrades that is going to happen, we will have a first right of refusal. Any new banks come in, in the region who wants to do the core banking implementation or digital banking implementation, we will know about it and we will be able to pitch our solution. So that is a huge opportunity for us in this region. Of course, we just did it. So it will take some time as this is a heavy investment, but our pipeline is building. We have built the corporate loan origination system. Again, it is automated system. We are building the retail loan origination system. We have built the banking analytical platform. So we want to cover end-to-end banking, life insurance, channel discovery, digital wallet, which is directly connected with all the digital banks in the region. In Pakistan coming, they will need this. So CRM for the banking platform, telco, international carrier wholesale, and also telco CRM. So all these solutions, we have been investing in all these solutions for years because what we believe is that in consulting and in global SI, we need to have some differential advantage. We need to have competitive edge to explain it to the customer. We are not just the technology player. We know the business. We have the solutions that support you. These are our door openers. Once we are in the customers, we expand, land and expand, and we keep growing that customers and sell anything what we do. As I said, digital data and cloud. Next. Rui. So, sorry. So again, we are pivoting from our strategy. As I said, digital, we have built the digital studio, a Studio 77, that's what we call. This digital studio, we have a user experience labs, we have usability lab, we have all the design innovation that any customer need from end to end, all the design thinking workshops, usability, the fidelity of high fidelity designs and so on and so forth. We do in this design studio. We bring our customers, we test their product, and all of these things is happening in all of our centers. And I think that is going to give us a huge momentum because we were not doing this before. Like few years ago, we didn't have those. Now we have those environment and the spaces where we can attract the best talent from the world. And also we can show it to the customers, our capability, because this is one of the essential part of the digital transformation, experience design and design thinking. Next. Awards and recognition. I already shared all these awards we have received in the last year. Again, what these awards and recognition help us in marketing, and once we share with our prospects and customers, it establishes the credibility, and that is helping us in winning more businesses. Next. And these are the partnerships, again, one of our source of like immense source of new leads and opportunities and new clients coming from these channels. So Microsoft is giving us the opportunities in the region, IBM, Temenos, SAP. I think these are our sales engine, I would say, the largest sales engine, the largest funnel that we get from our partners and principals, because they need implementation partners like us who can serve their customers, because they are interested in only licensing revenue, and we are interested in implementation revenue. So it's a nice combination or a marriage that everybody wins, right? So next. So our client composition, as you can see, we have grown in customer base as well, like from 129 to 191. And as I said, recurring revenue comes from these customers. Once we sell more and more and more to these customers, the revenue is going to increase. As you can see that more diversified, more $5 to $10 million accounts, more $1 to $5 million accounts, like doubled almost from the last year. And also like under $500,000 to $1 million, we're doubled as well. So all of these are the positive signs, because as we are growing, we need more and more client stratification, and we need to grow each and every account, what we have, if it is, and we need to keep moving in the category. And you can see that movement in the ongoing next year as well. Next. This is our management. I'm proud of our leadership, wherever we are today, and whatever we are doing. It's all because of our board's help, our chairman's direction and vision, and the alignment that what he provides as the mentorship to the whole leadership, and also the leadership team. I'm proud of my leadership team who is serving us and working day in and day out in all these geographies and delivering the stellar results that all the shareholders and creating the shareholders value. So financial review, Rui, can you please cover that?
Yeah. Yeah, hi. Sorry. The presentation was stuck. Sorry for this. Yeah, so the first, on the first slide, we just wanted to share the overall financial performance of the company. In PKR, 28.83 billion rupees revenue you can see here. This is the normalized of the one-off transaction that we have also covered in the commentary of the results that we had published, and of the directors and in the directors report as well. This is the sale of one-off license that we have sold that Asif has also mentioned. It's called CLOS, Corporate Loan Origination System. The revenue was recorded in Q4, and because we had we had acquired the company, so the cost of the asset was revalued. Asif can give detail on.
I think I want to add something, that CLOS was the platform that once we acquired NDC and during the acquisition, this platform was not valued in the deal, of course. So we were lucky. And once we went and discussed this asset that NDC was creating, we saw an opportunity that somebody is interested in buying that asset. So we did the transaction very quickly and closed that deal. I'm proud of that. Like it's one of the great deal that one can have, because as I said, like it was not part of our pricing when we acquired. So we acquired the company at $31 million, and we were able to sold only this asset at $15 million cash. So $8 million has been paid, and remaining 7 or more is going to come off royalty. So that reduces our acquisition cost, and it's a cash that. So I think that was one of the deal that, of course, you might have seen. Like, of course, however, we have recorded in accounting, but it's one of the transaction, and we didn't get the profit of $15 million in the book, but I think it has been a stellar transaction because it reduces our valuation. What we have done, like half of it is covered through just sold of one asset. That was amazing. I think And I think one other thing that what I was sharing, the country model bank, the license that would be bought, I just wanted to highlight so everybody understand for the future as well. It's a 5 years exclusive, like 5 years deal that we have. So no one else can build that. We have the exclusive right for that. We are building that platform for the core banking. So now what we are amortizing that, we bought this at $15 million as well. So we just amortizing over 5 years roughly. So it's basically our insurance to get more growth in those regions, because we will have the upgrades right, and we will have new deals will be exposed to us, and we will be selling those, and whoever sells it, our country model bank will be part of it. And it's a SaaS-based revenue. So it's a recurring ARR, annual recurring revenue will be increased. And as you can say, once you sell the asset, it is a profitable revenue, because once you build that, then of course, after that, it is like more selling. So I just wanted to highlight, because this question will come. So I just wanted to clarify before.
Yeah, so taking out the one-off impact of C-loss revenue, if I normalize the margins, you can see that the operating margin for the full year is around 19%, and GP is 30%. And since Asif has said we are taking a high amount of amortization, so we started looking at EBITDA as well, because now it's become relevant for us. And EBITDA for full year is 22%. I'll take you now to the quarterly performance charts, where again we have normalized the C-loss revenue in Q4. So Q4 was a bit flat, but you can see that in Q1 we have closed the quarter at 10.7 billion rupees. And if you look at the growth in PKR terms, we have grown by 101%, but in dollar terms versus Q1 2022, we have shown a 38% increase. And if I look at last quarter, which Q4 2022, we are still giving a 6% increase in dollar terms. In operating profits as well, we are showing a 17% increase versus Q1 2022 in dollar terms, and in 11% Q4 versus Q4 2022 in dollar terms again. In PKR, of course, because of devaluation, the growth is significantly higher. In net income as well, we have excluded, if you remember or recall, there was a one-off gain, accounting gain again in this dilution of control in subsidiary EP system, so that we have normalized in 2021. And that's why the number displayed here is showing a 3.5 billion rupees gain. But that's the normalized, and the normalized growth in full year 2022 is 86%. The interesting thing that I want to highlight here is that Q1 2023 has grown by 122% versus Q1 2022 in dollar terms as well. And similarly, the profitability has grown by the same percent, a very high percentage, if you look at Q4, compare it with Q4. This is our revenue breakdown by geography. A high portion of our income is coming in foreign currency from North America, Europe, and Middle East to export. And because this is based in, this geography is based on customer presence. So Pakistan, although I have another slide where I show you the rupee-based revenue is very small, but still Pakistan is contributing around 22% because customers are located there. We started a new segment from Q1. Asia Pac's become material enough, so we have started it, showing it as a separate segment from Q1. So this is revenue by vertical. As Asif has shared as well, that we are focusing on 3 main verticals: BFS, telco, and everything else we have classified as growth vertical. And BFS, with the acquisition of NDC, is become significant for us. It's at 29%. Then telco is the second largest vertical at 21%. So this is the mix that I was referring to, that although 22% revenue is coming from customers based out of Pakistan, but denomination, only 16% revenue is denominated in PKR. So we are entering into dollar-based contracts, even in Pakistan with Pakistani customers. So our 81%, 84% of our revenue is denominated in foreign currency, if you look at the Q1 numbers. And the interesting thing to note here is that 70% of our cost is denominated in PKR, as majority of our resources are based out of Pakistan. And that gives us a competitive edge over some of our competitors. It's the shareholding structure as of 31st December. 50% of the shares are held by current or retired employees of the company, and 50% is held by the institutions, out of which 16% are foreign shareholders. We have detailed out Systems Limited structure here as well. Last year, as Asif has also shared, that we have expanded at a very fast pace, with opened up some new markets as well. So you can see that Systems Limited has quite a few subsidiaries now. These are all wholly owned subsidiaries. In UAE, there's in Qatar, in Arabia, and then NDC Tech, which has a company in Pakistan and one in Middle East, and a small presence in Singapore. Then we opened up the Egypt Development Center last year, which was also a wholly owned subsidiary. The entity in Africa was also started last year. So there's a small slide on ESG, which shows our target or plan on ESG roadmap, that where we want to reach by 2030. I will hand over to Asif for the way forward.
Okay, thank you. Thank you, Rui. Next. So I think as we just been highlighting pillars of our strategic plan, we are continuously investing in talent. And now our approach is we are investing more. As you can see, our profits percentages are declining because we are investing heavily in the global talent, because we just don't want to rely on Pakistan, of course, as a resource. We want to bring the best in the world. Wherever they are, don't mind, we can hire and recruit and bring them into our, now we have multiple offices. So that is the strength that we want to cultivate. We'll continue to invest in the leadership and the service offerings. That is the game changer. That is going to be the defining moment for us when we go into the management consulting, because that requires a heavy investment and upfront business, right? So as Rui said, the BFS, we have created the solutions as I shared with you, and that is going to be, and also with the CMB, the rights that what we have for 5 years in these 7 countries, this is going to open up a lot of doors for us and a lot of recurring business, because as I said, like now with NDC Tech, we are not just core banking, we cover end-to-end services in any bank. We can run the bank, we can change the bank, and we can provide them consulting as well. And similarly in telco, with a lot of customers, even in APAC, Middle East, Pakistan, now we're growing that customer base as well. And going with the solutions, going with the managed services mindset, and using Pakistan as an asset, because here the resource cost, as you can see, we have a huge advantage of providing the quality service with the solution mindset, with the customer focus, and at the price point that no one can compete in the world with us, right? I'm very confident about that. So geographic and inorganic growth, we have invested heavily in the geographies. We will consolidate this year. We will double down on all these geographies where we see a lot of traction and hire those resources. And of course, we are looking actively for inorganic growth as well for M&A, because that will be, again, for hyper growth, this is important. So our investment priorities, I would say we are reinvesting in our growth, as I said. building the technology skill, building the new verticals, bringing global consultants and bringing the workforce, the consultative sales and account management. All of these people we are gathering and we are reinvesting in our growth. So one of the questions that we have is why we are not giving that high dividend in a growth-oriented company. You need to really reinvest and do the growth, right? Because with the growth and even in dividend, like if you see, like we have given almost 5 rupees. Last year it was 5 rupees as well, but shares are doubled. So it's 100% growth in dividend year over year. But of course, our goal is to use that cash and use that in growth, right? So doing M&As, again, M&As will help us in bringing more talent, more leadership, more challenging environment, like internally, and as well as more growth in the new markets and new verticals as we keep growing. So that's our capital allocation policy, growth and shareholder returns. But of course, I'm very positive that was the growth that of course the dividends will increase, but more focus on the growth versus the dividend. But that's our priority number 3. But definitely we will keep that as a priority always. Next. Next. Done? We're finished? Huh?
So thank you, everybody. Thank you for listening, and thank you, Asif and Ruhi, for this wonderful presentation. I think few of the questions have already been answered by Tahir. So in the interest of time, we have just 20-25 minutes. I'm merging few questions. So I think Asif and Ruhi, the question related to your transaction of $15 million. So there are 3-4 questions. One is, if you can just shed more light, more details of that transaction. Once again, few participants want to know about that, and especially the accounting treatment of this $15 million, and going forward, the royalty treatment, will it be amortized or not? So this is, I think, one part. The other part is that how much of the revenue NDC was generating through this asset. So if you can just highlight on the transaction once again with specific focus on these 2 areas.
Okay. Rui will add on the accounting treatment, but I will just explain the business logic for it. As you asked the question, that it was a product that was IP that was developed. So there was literally almost no revenue for that solution, right? A little bit of revenue, but not tangible material. It was an IP that was developed, and we wanted to sell in the customer base, and we got one big customer who can say that, okay, we'll buy the IP. So we did the ROI calculation that if we keep selling, it will take us N number of years to receive that revenue, and once we sell it once, it will be one-off type of a deal, right? So accounting treatment for this transaction, Rui can explain, but I just wanted to highlight that's one-off transaction.
Yeah, so I'll just briefly share with you that when you acquire an entity and when you consolidate it with the numbers with the standalone accounts, then you have to revalue the assets acquired. And the reason there is no gain reflected in the consolidated accounts is that the same asset that we later disposed of or sold to Temenos was revalued in the consolidated accounts, and hence the cost is almost around the same level as the revenue that we received, and hence there is no accounting gain. But in NDC books, of course, the gain was recorded because the asset had a nominal value. In consolidated accounts of systems under business combination, you don't see the gain. I hope this answers the question.
Yeah, thank you very much. Okay, now I think related to the margins, there are a few questions where the participants have asked the reasons for the decline in margins. The second question is, with the economic condition in Pakistan, what do you expect margins here in Pakistan business? And another related question is, What's your outlook on the revenues from coming from North America and especially in Europe, where we have been seeing a slowdown? So if you can just highlight on these areas. Thank you.
Okay, so margins, as I explained earlier, we are focusing on growth, right? And as you can see that when you open the new countries or new geographies, new verticals, new consulting and new technology, all of these things require investment in OpEx, right? There is no other way. I don't capitalize anything, right? So or we don't do like just whatever we spend, we grow, right? It's for growth. So initially, when you open any geography, you put people first, you put teams first, and then you start getting business, right? And then you start building the pipeline, then you invest further and so on and so forth. So with this is one of the reasons that we are investing even in solutions, as you can see in the slide I've shared. So all of these things are like expenses, right? So for the future growth, and again, we are growing by X percentage, as you guys can see that, like from last year to this year, it was 100% growth from in a rupees term, even in dollar terms, it is a greater growth as well. So, so for that kind of from a growth perspective, this is required to invest, right? And the second thing that you asked about the domestic business in Pakistan, I think our business is not associated with Pakistan economy, right? We are only working with the large clients, the banks, and you guys, whoever works in stock, they are melting money right now. So they are investing in digital transformation. They're investing in technology as well. So they are our largest customer. And that, of course, in telco, we are getting the managed services, which is recurring business. So our margins, as I said, SAP practice, we developed out of Pakistan. So we had no business because initially when you build any practice, all these new practices on metaverse and all of these, we are just building all of this out of Pakistan because we have a home ground to play with, right? We had 0 customer in SAP. We had now 20 customers. We cannot repeat this kind of an exercise outside of Pakistan, going, just saying, okay, we are building the practice and give me the work. So this is a home ground for training. So we made all of these investments. So Pakistan margin was down for that reason. Of course, as we are maturing, it's not going to be the similar margins as the other geographies because we invest in Pakistan to groom the resources, to get the challenging work in the new things that we develop so we can export. So, but the margins will be better than before for sure, because we are focused on that. But, and of course, our contracts, there are few rupees, like 16% contracts are locked, are like doing in a rupees business as well. Like all the customers in Pakistan don't pay in dollars. So 15% is in rupees. And with the rupee depreciation, the cost is also, of course, increased for our side as well. So the Pakistan margins are depressed. From a North America and Europe perspective, yes, it was not on hyper growth years for us, but we are expecting H2 will be better because few of the deals, the larger deals that we were cooking, and due to this little bit of slowdown in Europe and US from that front, the deals were like a little bit pushed off. But I'm seeing we are seeing the traction back, and I'm positive that H2 would be better for Europe and North America as well.
Yeah, so another quick question, how difficult it is to get the right person, the right talent, especially in this challenging environment. So
that is our business, right? So whether it's a challenging or normal environment, really it doesn't matter. We have to get the right people, and we make mistakes as well, as we all do. But I think we are attracting talent because why? Again, systems being the largest, and we are providing employee ownership opportunities. We are providing growth opportunities. We are giving them the learning that they are doing the enterprise class transformation for the large clients, which they can't get anywhere else in the Pakistan, because we are interacting with enterprise customers. So enterprise customers have enterprising challenges as well, and the business solution and the problem, we are the problem solvers, right? We solve the problems, and once you solve complex problem, your learning comes with that with that problem solving capability, right? So people are coming to us and sticking to us. Our retention is getting better as well. And also on top, since we are 16 countries, we're sending people abroad. In today's environment in Pakistan, if you give an opportunity to a 25-year kid, to go and perform in Europe and even UAE, KSA, that's a game changer for them. And I think I'm proud of that. My team has been working day in and day out to groom those people and talent and giving them opportunity. It gives us immense satisfaction.
Okay, so another quick question on Middle East revenues. In dollar terms, quarter-on-quarter revenues from Middle East are down. So any special reason for that? And what's the outlook in the coming few quarters?
No, it's not down. I think it's after one-off transactions that see loss. We have Middle East as a growth from quarter over quarter, from like where we were from Q4 to Q1.
Okay, so one question I think repeated many times earlier also, so need a quick answer. What's your relationship with your North American subsidiaries, especially VisionNet, and what's the sharing formula that you have agreed with them?
Yeah, now if you can see, like our business is 28% from VisionNet or Europe and America, and 72% of our business is direct business with the customers. I think whoever has been attending this percentage has been changing, but of course our relationship, we are the same group, we are the associated companies. We have been like telling this to investors since last 9 years. This is the constant. This relationship is, we have the rates that's agreed, and whatever the business they get, we get the resources, because we are the captive offshore center for VisionNet. So most of the work, that whatever is not on site, it happens in Pakistan. All the IP development and everything happens here. So in our center, so it's a pretty straightforward, pretty consistent formula agreed, and we are following that. So whenever there is an opportunity where there is growth, it happens here, and we are enjoying that growth. It is a highly profitable growth. Year on year, it is growing. As I said, it was not hyper growth. As you can see, few years, of course, the economies and the sectors, a few sectors that we were engaged, that was not growing in North America and Europe itself as well. So, so that's why it's slowed down. Otherwise, as I said, like few deals that we're cooking, it's going to be, it will come back.
I don't know whether it's relevant. I think somebody is asking that you incurred a 300 million rupee loss on the Pakistan business. I'm not sure whether it's the right statement or not. So if you can just comment.
300 million loss. I don't know where you are seeing. I think we didn't have a loss. We had a lesser margin. I think it was a 2% or 3% margin last year, operating profit, but not a loss. I don't know where they are looking at. As far as I think, 4% operating profit.
Another question is that recently your trade receivable has increased. So do you think it will be normalized in the coming few quarters, or it will remain high?
No, it will come down. We are trying our level, always try to maintain less than 120 days, and that's what we're working. And I think Q2 will be much better.
I think there are many other questions coming in, so I'm just trying to club it down. So people are just interested to get their guidance for 2023. I'm not sure whether you are allowed to disclose that, or but any kind of outlook in dollar terms would be appreciated.
You answered your question, but I think as I can say only one thing, that we are focusing on the elements which generates growth. We are very, very positive about our strategy. We have a very committed leadership, which is required to drive that strategy. And we have healthy pipeline, and we have great customer base. As you can see, 190 plus customers, active customers. We have enough ammunition to sell. So, and we are very well diversified in geographies, very well diversified in technologies, very well diversified in industry verticals. So that's what I can say.
So I think maybe the last question, any timeline on the new geographies that you are targeting, and what you are planning in the next maybe 12 to 24 months?
I think, as I said earlier as well, we have opened up together all of these, right? And if you guys are seeing the pressure on the margins, we really want to, what our strategy is always like, okay, now we have opened it, we will build the business, we'll grow the business, so margins are back, and then we'll reinvest again and open up more geographies and more experimentations, more risks, and more and more and more, right? So I think for this year, or for at least this year or so, we'll consolidate, we'll double down because we have done enough. And we see as a management and the leadership and the board, we have the opportunity, right? So in those markets where we invested, and with the more investments and double downing on those markets will yield better results than going after the new market right now. But as again, I would not comment. We are very growth mindset. So whenever there is an opportunity we see, and if the company opening is required to grab the opportunity, we will not shy away, because this is what we do for a living.
So there are again many questions which you have already answered, so I'm not repeating. And there are many data which participants are asking, which was very clear in your presentation. That includes about the dividend, that includes about the concentration. I think those participants who may not get the answers, I request to please refer to the presentation and the published accounts. You'll get most of the answers. So I think once again, we are short of time. Thank you very much, Asif and Ruhi and Tahir. Any last word you want to tell to the participants before we close it?
Suhail, we have 10 minutes or so. If anyone wants to ask more, I would like to just highlight on our systems ventures investments as well. I think we didn't touch upon that during the presentation. So I would like to, since we have time, I would like to give an overview. Our one of our group companies, One Load, you probably know about it, most of you. So that is being progressing. We have the EMI license finally, and we're doing POC and others with the banks, and a lot of new use cases, financial services use cases are there. We have a very good board now, from IFC to Melinda and Gates to Mike, few very successful in fintech people from the region who has done these type of work. They are part of the team as well. They're part of the board now. So we have a very good board, very good direction. So hopefully we will have something going on in that. And I'm positive. Again, Pakistan slowdown affects those One Load type of fintech things, which you all know. The other investment that we have done in Jugno is doing really well. I'm really proud of the team and really blessed that we have invested in them. Seeing a great positive outcome and positive outlook. They have raised about, as I said in the last report or analyst briefing, about $22 million from a Saudi fund, Saudi company. They are in the similar business. So that is, I think, whatever investment we have made, I think we have a very, very hopeful outcome from them as well. And the other investment we have, Jomo. E-commerce is definitely not in Pakistan, not doing that great. So that was a very little investment, about $500,000. So it's not a big investment, but of course that is also growing, but not with the Pakistan economy and the inflation. All the e-commerce companies are not growing at that pace, so they are not at that pace as well. But Jugno, as I said, it's growing at a tremendous pace, and I'm proud of the team and the leadership that they have.
Okay, so just a few other quick questions about your competition. So what are your local and international competition, and are there any new competitors coming in that could affect your margins?
We live in a global village, right? So competitors are left, right, and centers. But in Pakistan, to be honest, Pakistan is not our market, right? We are just doing 15-20% business. So Pakistan, we have competitors in a pockets, right? Nobody, as you know, is doing what we do in all these verticals and the technology. So we have banking, we have one competitor. To telco, we have another. So Microsoft, we have another. SAP, we have another. So no one competitor. But globally now, I think I'm really proud of my leadership team and the regional team and the team here. We are really beating the large Indian SIs, so in the contracts, and it's pleased to report, right? Of course, like beating like 300,000 people company, and we are very small in a global scale, we are nobody, right? We are a very small company. So our ambition is to be bigger and be at that level. But of course, right now we are very small, right? So, but beating them and winning the projects from these large SIs in the region, it's very hard to do it this in a North America and Europe market. We're competing, but hard. But in this region, we are finding it's very encouraging that we can have a similar kind of an opportunity and we can compete, and we have won as well. So that gives us a lot of confidence. Once you win, that gives a lot of confidence. You can beat anyone in this region at least, right? So there's a good segue from what we say. And competition, we're not afraid of competition. Competition is there. We need to be better than them, and we need to be, as I said, Pakistan's advantage in terms of price, and with the dollar devaluation and the cost is in PKR, no one can come closer to us when we enter into when the price talks comes in. I think if customer is that sensitive, we can beat anytime.
Okay, on hiring, what's your strategy? Most of it, is it from Pakistan, or you are hiring from other countries, and especially where you don't have offices? So what's the model right now?
No, we have, as Pakistan is of course 80%, greater than 80%, 84%, if you would have seen it in the graph we have given. So Pakistan is the largest, of course, will remain the largest, because that's our strategic sourcing point. This is our strategy, this is our differentiator, right? That we are the largest, we are like Infosys of Pakistan, we can attract any talent, we can go and make that claim, and we can stand in front of anyone, right? So that is our strength, and that will remain our strength. But to mitigate, we have opened an Egypt center. We have shown you, we have now 100+ people, developers over there, to support our markets, because Arabic is speaking and so on and so forth. So we have now Egypt as a market. We are hiring from Jordan. We are hiring from these regions. And also, as I said, as a part of the strategy, now we are investing. It will be, again, a lot of cost. It's a dollar-based cost, because we are hiring from globally, all over the world. Wherever we find the good talent, we have hired the recruitment company, and we'll bring them to Dubai, because everybody wants to come there and live there, and wherever they are in the world, and then bring them to Pakistan as well. Like whoever wants to work with us and spend time in Pakistan, no matter which nationality, we will bring those talent as part of our strategy, because we need that kind of a mix to go to the next level. We just don't want to limit ourselves to the talent available in our markets, like in Egypt and Pakistan. We want to open us up, right? So it's an investment, but I'm very confident about that investment. Initially might be a painful, but that's okay.
I think another question that you may have also answered, but what are your margins on telecom and BFS? Maybe if you can just highlight briefly.
It depends on the geographies as well, right? So in the Middle East and Europe and America, great margins, but in Pakistan, depressed margins. But that's okay. As I said, we want to train our people in these markets and develop assets or accelerators or IPs from Pakistan and sell it abroad. So our margins are in line with whatever you are seeing in the profits. And again, our margins are higher in those geographies versus Pakistan, and we share in segments, right? So mostly it's not like margins differ from vertical to vertical that much, right? It's mostly in line. Large banks are better, like banking, DFS is a better margins, I would say, if you want to ask this question.
Okay, I think finally, any challenges on the Pakistan economic situation, especially vis-a-vis restrictions on import, inward remittances, outward remittances, this KYC rules and regulation? Is there any area which is bothering you, considering Pakistan's economic challenges?
We are blessed that this is the only sector that is not dependent on any imports, right? We have imported 3,000 laptops. We are secure and all the servers, and we don't need anything, right? So we're not dependent on electricity. We have the fuel we have the backups for everything. So we are blessed as one of those sectors where we are not dependent on government. We are not dependent on government subsidies. We are not dependent on government actions. We are not dependent on import. We are the beneficiary of devaluation and the interest rate increase because we are cash rich. So all of these things which are negative for other industries is a positives for us, which is not good for the country. I completely agree. But we are bringing dollars. So that's a plus. So I think only thing that I would say, its economic situation doesn't bother us. Only thing is that, of course, our country situation as an overall situation needs to be better from a perception and the branding perspective. I think we need to brand our country better because we have the potential. Pakistan has the potential. We can beat anyone in the world, but our perception, our brand image as a country needs to improve because we can sell ourselves. We can sell our company, but we have to sell our country as well first, right? If we can get some momentum in selling a country from the government, that's the only help, right? Which is part of the government's job in any case, right?
Okay, I think that's it. So we are over with time. We have a lot of other questions. I request the participants to please go through the quarterly and annual accounts and the presentation. And still you have any questions, so please feel free to contact us. We have a very good investor relationship officer at System. We will help you out and we will keep on bothering Asif and his team. So any final word from your side, Asif, before we close the session?
I just would like to thank everyone for attending and patiently listening. Thank you, Suhail, for moderating today's briefing. Thank you, Rui Tahir, for preparing such a nice presentation for me. So I think overall, as Suhail said, we are very open and we are transparent, open book. We will put this presentation on our website as well. Our recording of this investor briefing will be on our website as well. So you can review again, you can listen again. And if you have any questions, please don't feel free to reach out to our investor relationships or Suhail's team. I think if you are, so anyone want to have any question, right? We are very, very confident and give you all the information that you need to make your investment decisions or any decision that you like to do, because we truly believe in transparency. We truly believe in corporate governance and compliance and all of these things. So we have no fear in sharing anything. And we're very confident. Again, I would like to thank all the investors and the shareholders for having a trust in us, and thank you.
Thank you for participating. Thank you, everybody, and have a good day. Bye-bye.
Thank you. Bye-bye. Take care.